Guys, in this video, I'm going to show you my exact step-by-step take profit strategy on how you can turn $6,000 into $436,000 investing into the private credit protocol Clearpool. So before we get started, I have to say this video should not be taken as financial advice. These are just my own strategies and opinions and research. Do your own research, but use this channel as a starting point. So why do I think Clearpool is gonna pump this hard? Well, I already made a video on why I think under collateralized private credit protocols are gonna pump really hard this bull market, and I'll talk about it a little bit in this video. But we're gonna talk about the problem. We're gonna talk about how Clearpool can solve it. I'm gonna show you guys the best way to buy it. I'm gonna show you my take profit strategy and how you can turn 6K into 436K. And then if you stick around to the end, I'm gonna show you my yield farming strategy, so you can see how you can accumulate more Clearpool so you have more to sell when and if these take profit levels are hit. So without further ado, let's get straight into the content. So like I said, I made a whole video covering this whole topic, but I'm gonna talk about it briefly here because it's important. So what is the problem? Well, the problem is in crypto, you can only get access to over collateralized loans. Kind of like when you go to a pawn shop. You know, if I want to pawn this phone, I give the pawn shop the phone, they'll tell me how much it's worth, and I can take out a loan against it. If I don't pay it back, they sell the phone. If I pay it back, I get the phone back. But this isn't practical. And what I mean by that, the whole premise of getting a loan is to get access to money you didn't have beforehand. This over collateralized lending that's done in crypto, imagine if you were going to go get a mortgage and your mortgage was $400,000, but you had to put down $450,000 to $500,000 to borrow $400. One, it's more risky for you because you have to worry about the person you're lending that you took the loan from, if they're going to be able to keep up with your collateral and not lose it or get hacked like we saw with BlockFi and Celsius. But two, this just isn't practical. That wouldn't make sense if you were getting a mortgage. This isn't how real people borrow in the real world, clearly, and it's for damn sure not how institutions borrow as well. So this is a huge problem mainly with crypto companies. Like, crypto is becoming more and more legit, but mainstream banks and financial institutions don't lend money to them because they still see it as risky. And this was even before the BlockFi, Celsius, Three Arrows Capital, FTX debacle happened. But this just made it worse because it made these protocols guilty by association. Not only that, let's say they could get access to mainstream borrowing and lending, mainstream capital. Well, it's monopolized. So the large firms that are doing the lending, they set the prices, so it's expensive for them. Not only that, the federal funds rate is over 5%, 4 or 5% right now. I don't know the exact data, but interest rates are high, which also makes costs for capital even more expensive. So now let's talk about the solution. The solution is private credit protocols. And I made a whole video covering Clearpool, its value proposition, their team, their tokenomics, literally a whole fundamental deep dive. So watch that video if you haven't. So I'm not going to dive super deep into Clearpool in this video, but just know they issue private credit. And the other cool thing about protocols like these is that they're a part of what's called the real world asset narrative. And you guys know, if you've been watching my channel, I think real world asset protocols is going to bring in the most money because it's attractive to institutions, and financial institutions have the most money in the world. So first, let me show you guys proof of this. If we go over to RWA.xyz, you can see that in the peak of the bull market, there was $1.5 billion in private credit. Now, this is proof that once market conditions are more bullish, people are trying to borrow more money. And I'm going to explain why that is in a bit here. But you can see it dropped, and you can see it's kind of been picking up. Right now, we're at around $494 million. And if we look at Clearpool, you can see Maple and Centrifuge are number 1 and 2. I've made videos on both of those. Got a video coming out on Goldfinch here pretty soon. But Clearpool right now, they did $183 million in total loans. Right now, they're doing $20 million in active loans. Average APY is 7.24. However, they do have a cash drag of 15.31. So this is the percentage of idle capital in the protocol. It's probably because they don't have a lot of liquidity. So 15% of the capital isn't being used right now. I don't know how up to date this is. You can see the fees earned, and you can see the market cap is only $51 million. Also, if I go to Echo and I type in RWAs, which is real world assets, and I hit categories, it gives you all the protocols. Now guys, what you want to do in a bull market is that you want to find protocols that didn't have their day in the sun, and you want to get ahead of the narrative. People are always talking about XRP, but XRP is already a top 5, top 10 coin last time I checked. You want to find projects that aren't in the top 100, top 50, top 20, top 10, that has the potential to get there. And if we think real world assets is going to be one of the largest narratives going into this next bull market, it's not crazy to believe that some of these protocols in this category are going to be in the top 100, top 50, maybe even top 10, definitely top 20. We called out Pendle back in November. If you watched that video and did your research, you could have made upwards of 371%. We called out Centrifuge, which is up right now on the 7-day, and you can see if we scroll down here, we talked about Maple a lot, made many videos on that, and you can see that Clearpool is number 651. You can see their market cap is only $51 million. But the crazy thing is, none of these protocols are in the top 100 yet, and I feel like a few of them are. So that's why I think these assets are going to pump. Going back to this example, let me just drill this point home, just so you guys know, like I actually understand the perspective I'm looking at. So I showed you proof here that once we're in a bull market, people are borrowing more money. Like this chart shows it. So let's talk about why that is. Guys, in the bull market, we're talking about crypto companies that don't get access to credit. These crypto companies have Bitcoin and other altcoins and crypto on their balance sheets. Once the bull market is just ensuing and going into full effect, their balance sheet is going to be ballooning, right? What is that going to do? That's going to increase their credit worthiness, and it's going to increase their risk appetite. They're going to feel like a genius, and they're going to want to go borrow money, and they're going to come straight to these protocols. The crazy thing about these protocols is they have a balance sheet as well. They have treasuries, and the assets on their balance sheet is going to balloon as well. It's going to increase their risk appetite, and it's going to make them more likely to loan. It's like the chicken and egg problem when the chicken and egg exists first versus you having to get one or the other. It's a positive self-reinforcing cycle. So as they're becoming more creditworthy and they're coming into these protocols to borrow more money, it's going to increase their active loans, which is going to make them fundamentally more valuable, which is, in my opinion, going to lead to a hard pump. Not only that, you also have tons of venture capital pouring into this space as well, specifically protocols like these. Guys, I'm recording this on February 26th, as you can see. Guys, if you're interested in this kind of stuff, click the link in the description, book a free strategy session if you want to learn how to conduct proper fundamental and technical analysis and get access to our buy and sell calls before we talk about it on the internet, and get access to our yield farming course that helps you deploy the same market making strategies that major financial banks and institutions have been doing since the 19th century. As you can see here, today is Monday, February 26th. I made this post 2 weeks ago inside of our private group telling people about Clearpool and Centrifuge. I made it at this purple line because that's when I bought in, and as soon as I buy, I tell my members as well. You can see that if you were part of the group, you could have got a almost 100% appreciation in the bear market and 93%. So if that sounds interesting to you guys and you want to be a part of an elite group of like-minded people, click the link in the description, book a free strategy session, talk to one of our team members. You'll probably talk to me. I'll answer any questions you have on yield farming, show you what we have. You can decide if you want to move forward, but at the very least, I want you to lead the call with a better understanding of yield farming and DeFi, so that if you don't decide to go with us, at least you can deploy strategies on your own. Let's get back to the video. All right, so now that we've went through all of that stuff, why I think Clearpool is going to pump, let me show you my exact take profit strategy so you can see how I plan on turning 6K into 436K. All right, guys, so this is my take profit plan, and like I always say, the structure of your investment is more important than the investment itself. We've all heard about people who held to the top of the bull all the way back down, like the Doge guy. I'm pretty sure he wished he would have took some of the $1 million in profits that he had. Don't get romantic about these protocols. Have a plan to get out before you get in. And I made a whole video on how to master the art of taking profits and the 3 triggers that you can have. All right, so let's get into it. You can see at the time of this video, the market cap is 44 million and some change. And when you're coming up with your take profit plan, it's good to have a conservative estimate as to where you think the price can hit, as well as an aggressive estimate, and then have your take profit strategy set up to where even if the conservative isn't hit, or if it exceeds the aggressive, you're still able to scoop a good amount of cream off the top and make some good money. So I think conservatively, we'll see a $7 billion market cap. And then I say aggressively, we'll see a $10 billion market cap. And I believe this because, one, we have institutions coming in. I talked about the problem. It's a blue ocean, right? And then if you look at Aave, Compound, and Maker, these are protocols that hit, and they're doing over-collateralized lending. These protocols cater to retail borrowers, right? Which is way smaller. And they hit $4, $5, $6 billion market caps. So it's not unlikely in this next bull market where we have institutions and a Bitcoin ETF and crypto is just more legit, and the SEC is getting punched in the face, that we can see this hit 7 to 10. So starting off with 6,769, I've added to the position since then, but I'm just, showing you guys the math that I did. My first take profit is going to be when it does an 8x. All right, so that will bring the market cap from 44 million to 353,837,096. All right, that'll turn my 67K into $54,152. At that point, I'm taking out 10K in profits. I'm already playing with house money, and most of the time, that's my goal, to be in a risk-free trade. And so no matter how much it goes down, I'm still in the green. All right, so now I have $44,152. My second take profit is when it does a 4x. So the price will go from 59 cents to $4.50, and the market cap will go from 353 million to 1.4 billion, right? At that point, my 44K is going to be worth $176,608. Taking out 60K in profits, so I got 70K in profits so far. Now I have $116,608. My next take profit is when it does a 2x. That'll bring the price from $4.50 to $13.50, and that'll bring the market cap from 1.4 billion to 2.8 billion. My 116K is going to be worth $233,216. I'm going to take out $100,000. All right. So now I'll still have $133,216. My next take profit is when it does another 2x. 1350 is going to be worth 40, and the $2.8 billion market cap will go to 5.6 billion. Right at that point, I'm gonna have $266,432, and at that point, I'm gonna take out $166,432 in profits. At this point, I'm gonna have $100,000 left, and now my next take profit, because we're getting near our aggressive estimate, is gonna be when it does a 25% increase. Every time it does a 25% increase from here on out, I'm taking 25% off the table. So if it does that again, I'll have 150,000. I'll take out 50K, right? And then if it does it again and it reaches our aggressive estimate, 10 billion, and to be honest, I wouldn't be surprised if it reached 15, but I always like to go conservative, even on my aggressive. I'll have 100K. At a 25% increase, it'll go from 8.4 billion to 10 billion. I'll take out 50K, and then if you do the math, you add up all my profits, and then what I still have left in the 70K, you just turn $6,769 into $436,000 and a little bit of change. All right, for all you rascals that stuck around, let's cover my yield farming strategy, and I think you're gonna like what you're gonna see, because with a fairly low risk strategy, you can accumulate Clearpool via triple digit yields. Let's get into it. All right, so first thing you want to do is go to CoinGecko, and you want to see, and this is also how you determine how to buy. These are the exchanges you buy on, right? The centralized exchanges you can buy on. But the decentralized exchange you can buy on is Uniswap v3 on Ethereum mainnet. And you can see that Clearpool USDC has the most trading volume of all the DEXs, 6.95%. So you want to buy your Clearpool with USDC, not ETH, because you'll incur more slippage. Actually, it looks like the ETH pool has flipped the USDC pool for now. So whichever one has the highest percent, that's where you want to buy. Now let's determine which pool we want to provide liquidity for. So we'll hop over to Uniswap, and we're going to hit top pools, and let's look at some data. So I always talk about, you want to find pools with good volume to TVL ratios, right? The closer the volume is to the TVL, the better. It doesn't matter if the TVL is big or small. Obviously, you don't want a TVL of 20K or nothing like that. Another reason why this is good is because you get to provide liquidity for a token before it explodes. So it's kind of like selling shovels near a gold mine that hasn't been discovered yet. Like, once people wake up to Clearpool, they're going to be buying it by the troves. They're going to come here to buy it because you can't get approved on a SEX super fast. You can use a DEX immediately. And people are going to be buying this thing way faster than liquidity providers are going to be providing liquidity. So the few people that are in these pools are going to have an opportunity to make quadruple digit yields for a short or maybe longer period of time. So you can see right here that the TVL for the Clearpool ETH pool is 203K, and the volume exceeded the TVL in just 24 hours. So in 24 hours, you have more volume than the TVL. Whereas on this one, you have $800,000, 837K, but the volume is only 218K. So I want to look at the Clearpool ETH pool. And it's not even just because of that. As we're going into the bull market, there are yield farming strategies for bull markets, bear markets, sideways markets, taking profits, buying the dips, like all types that I've talked about on this channel. But as you're going into a bull market and you want to take profits, so it's kind of a hybrid of two strategies, volatile pairs are going to perform better because you're going to have a higher likelihood of being able to stay in range. Like when Clearpool moons, it's going to go extremely far away from USDC. And if you want to stay in range, you'll have to make it extremely wide. You won't be able to make as much. But ETH is going to moon with Clearpool as well, albeit I do think Clearpool is going to outperform ETH. So I'm going to set my range a little higher to the upside as we're going into the bull market. But this one is going to pay me a lot more, and it's going to give me a higher likelihood of being able to stay in range. And if we click it, you can see that the volume's been really rising as of lately while we had this this ghost town stint here. And just to show you proof that you have a higher likelihood of staying in range here, so this is Clearpool ETH, and you see when it did its pump, Clearpool only pumped 61% against ETH, right? But you guys saw earlier in the video that Clearpool versus USDC, it pumped 93%. So you have a higher likelihood of staying in range, and you would have made more money. So let's say I want to provide liquidity in this range. We're on the weekly chart here. If I go to the daily, you'll be able to see things better. So let's do that. If I provide liquidity from this range, this blue line to this blue line, you just copy and paste the numbers. How much would I have made if I was in this pool for the past 60 days? You go to Builder Metrics, you type in your minimum and your maximum, and you can see that this is low risk and it has a really good volume to TVL ratio, over 100%. You can extrapolate these numbers to, whatever your portfolio size is. With just $1,000 deposit, I could have made $226.45 per month at a yearly APR of 275.51%. Guys, that is really, really good for doing absolutely nothing. And the more Clearpool I can accumulate, let's just say I'm getting 200% APR for 6 months. So I'm able to accumulate an extra 100% in Clearpool. If I have 10K in a pool, I just accumulated 10K in Clearpool for free. I just showed you how you can turn $6,000 into 436K. So that means if you have $10,000, you'll be able to turn that into $1 million or more if you just use the same exact take profit levels. And this is why I always say combining yield farming with trading can maximize your profits, because all three, yield farming, altcoins, and stablecoins, they have their own purpose. Stablecoins are good for buying the dip when prices are cheap. Altcoins are good because you can sell them when the price is high for more stablecoins. And yield farming is good because you're constantly able to accumulate more stablecoins so you can buy more dips, and more altcoins so you can sell more for higher prices. They all work good in tandem. Yield farming is just another tool on your investment tool belt. So guys, with that, I'd like to conclude this video. I really hope you got value from it. Definitely watch the Clearpool video that I made conducting the fundamental analysis. Don't just buy the token because I'm talking about it. Like, really do your research, guys. I've lost most of my money just taking hot tips from people. And I'm not saying I'm wrong, but the more convicted you are in an asset, the more likely you'll be able to either weather the storms or look at the storms as buying opportunities. And lastly, like I said, if you're interested in this kind of content, you want to learn how to be a professional yield farmer, investor, technical analysis, do all these things, become a well-rounded investor, click the link in the description, book a free strategy session with me. We'll see if it's a good fit for you. But other than that, I thank you guys so much for tuning in. I love every single one of you watching, and I will see you guys in the next video. Take care and trade safe.